So we must be live, guys. What's up? Oh, where's my mic? I forgot my mic. Let me bring it back here. What's up, guys? I hope you have a great day. Let me adjust my screen and let's go ahead and jump in. We have a lot to talk about today. We had some jobs data coming out, some wage data coming out. The index S&P 500 is going up. It's 0.4% up right now. Dow Jones is 0.25% up. And Nasdaq is 0.5% up. Where is Russell? Russell is 0.4%. So stocks look like they're only going up for now, at least. Let me go ahead and open whatever news we have to read. This was an interesting article. China regulator seeks to avoid US delisting to Chinese firms. So there is so much drama going on with Alibaba right now. And Alibaba is dropping even more today, which is sad, but whatever. Alibaba right now is sitting at 119 per share. And let me remind you, it dropped all the way from 240 to 50 to 60. And the highest that it had gone was $300 at the peak. Anyway, let's read this. Chinese authorities are working with US counterparts to prevent Chinese companies being delisted from US stock exchanges. From US stock exchanges. A Chinese regulatory official said on Thursday as a lengthy dispute about auditing standards rumbled on. US authorities are moving towards kicking foreign companies off. Give me a minute. American stock exchanges if their audits fail to meet US standards. The Public Company Accounting Oversight Board, PCAOB, and US policymakers have long complained of a lack of access to audit working papers of US listed Chinese companies. Citing national security concerns, Chinese authorities have been reluctant to allow overseas regulators to inspect working papers from local accounting firms. Okay, we don't think that the listing of Chinese firms from the US market is a good thing either for the companies, for global investors or Chinese-US relations. Shen Bing, Director General of the China Securities Regulatory Commission's Department of International Affairs, told a conference in Hong Kong. We are working very hard to resolve the auditing issue with US counterparts. The communication is currently smooth and open. There is a risk of delisting. Of these companies, but we are working very hard to prevent it from happening. This is sad. In December 2020, during the last weeks of his administration, President Donald Trump signed a law aimed at removing foreign companies from the US exchanges if they fail to comply with American auditing standards for 3 years in a row. Okay. A map on the organization's website showed China as the only jurisdiction that denied the PCAOB necessary access to conduct oversight. Speaking at the same conference, Ashley Alder, CEO of Hong Kong Securities and Futures Commission, said he feared Sino-US tensions and could prevent a solution. Sometimes politics can interrupt technical solutions that are sensible and achievable, and I pick up a degree of political attitude within the US establishment that is not necessarily conducive to a better outcome. By the way, the market is opening in 30 minutes from now, so we have a while to go. The futures seem to be going down a bit. Nasdaq is only up 0.3% now, and S&P is only up 0.2% now. Let's see. We might see a flip happening and going back to negative. This will be interesting. Usually, something totally outside of our topic is that usually on Fridays we see the bigger dips of the week, just so you know. Anyway, sometimes politics interrupt technical solutions that are sensible and achievable, and I pick up a degree of political attitude within the US establishment that is not necessarily conducive to a better outcome. Hong Kong previously faced similar problems with access to mainland China audit working papers, but Alder said the SFC's relationship with the CSRC, a 2019 agreement, and helped resolve these. Hong Kong has benefited from the Sino-US spots. Okay, whatever. The Hong Kong Stock Exchange last week. What do we have here? Companies have carried out secondary listings. Okay. Partly as backup in case the companies are delisted from the Nasdaq or NYSE. The Hong Kong Stock Exchange last week confirmed it would proceed with rule changes to make it easier for overseas listed Chinese companies to carry out secondary listings and for companies to change a Hong Kong secondary listing to a primary one. So what it says here is that it probably the secondary listings that those companies have, for example Alibaba, has the secondary listing of 9988 for 9988 for on the Hong Kong Stock Exchange. So that acts as a secondary listing. Anyway, let me see if the live is working. Yeah, it's working. Oof. Okay, let me close the Discord because I don't use it right now. And let's go ahead and move on with more with the stocks. Let's see. Let's check the crypto market. Bitcoin tried to go over 57.1k a while ago. It reached the high of 57.6k like 1 hour ago, like at that timing, and now it dropped back below 57k. So Bitcoin is struggling. Give me a minute. Anyway. Anyway, sorry, my mind is totally off today, guys. But anyway, all cryptos. Let's check the other cryptos as well on Binance and see what's going on. We have still the futures for the stock market are still flat at 0.25 up for S&P, 0.3% up for Nasdaq. If we open like this, I don't expect more green, but no one knows in the end of the day, so whatever. Let's go back to Barron's just a bit. Despite the inflation and all those potential economic uncertainties, the market still keeps zooming and going up. It's insane. Job growth, that was the news of the day. Jobs growth was weak last month, but some workers returned. The US added 210,000 jobs in November, far below expectations, but the labor force participation rate rose. Let's read this. It's a 1 minute read, so whatever. Hiring fell short of expectations November with 210,000 jobs added, but the labor force participation rate rose, suggesting some workers came off the sideline and the labor shortage may begin to slowly thaw. Economists surveyed by FactSet had expected to see an increase of 535,000. Check back soon for more details and analysis. Okay. The workers won't be coming back, COVID or not. Theories on where they went. 6 things. Let's read some of their theories. 6 things to consider before joining the Great Resignation. 6 things to consider before. Okay. I quit. How advisors are guiding clients. Commentary how the infrastructure bill is going. China's deal to delist from NICE months after blockbuster IPO. The listing rings alarm bells for Alibaba and others. Oh my god, so much bad news on every news website. Alibaba is 3% now pre-market, 3% down pre-market. Oof. The futures are flat, by the way. The workers won't be coming back. COVID or not, here are theories on when they went. Where did they go? New business boom. The pandemic has meted a record number of entrepreneurs. I think that's reasonable. That isn't what happened, and it wasn't even close. When you fire guys, when you fire people from their work, then they realize that they don't have the upper hand on their lives. And when they don't have a wage, when they don't have the basic necessities after a while, even though they are working for so long and they get fired of their work, then they will try to find other avenues for their income. So that's probably one reason why many people are going back to being entrepreneurs. Anyway, it's very high there's still that very high possibility that many of those might still go back after a while after they fail being solo entrepreneurs. It's very hard. Solopreneurs. Anyway, it remains a mystery. Yeah, whatever. But the pandemic has changed attitudes and priorities around work. That's for sure. Shuffled where people choose to live and unleash trillions of dollars in fiscal support, meaning that using COVID to explain a labor shortage that is worsening isn't sufficient and doesn't fully square with expectations that the worker shortage will resolve itself. Consider Google mobility data, which chart movement trends over time by geography and across different categories of places. Barron's dug through state-by-state reports, and the data undermined the idea that Delta does a mass return to work in September, and that temporary issues related to COVID explain the ongoing worker shortfall. Okay, mobility trends in states including Arkansas, Ohio, Oklahoma, and Maine show traffic is rising across all categories, except places of work. If it's a fear of COVID preventing a broader return to work, why is public transportation traffic up in states where workplace traffic is down. Okay, it stands to reason that a person avoiding work to avoid infection will probably avoid mass transit. There's nothing interesting here. If we still have 5 million who used to have a job and now don't, why is that wages continue to go up very quickly? Why is there a labor shortage? Do we have any more reasons? When let's see, we have exploded. Okay, when it last reported quarterly earnings, Robinhood said it had 22.5 million funded accounts, a vast majority of those considered active, up 130% from a year earlier. Assets under custody ballooned 205% to 102 billion during the same time frame. It isn't just stock trading. Crypto trading platform Coinbase Global, so they gave up with their work and they're becoming entrepreneurs, investors on crypto and stocks. Crypto trading platform Coinbase, yeah, probably will have news from that, but whatever. Oh, this comment has a ton of comments for some reason. This comment has a ton of likes. I would assume the impact of early boomer retirement is vastly larger than an expected class of entrepreneurs and small trade traders. This event was always assumed to be a major disruption to the labor force. Well, it's happening now. Maybe this. Oh, the futures are going up. Futures are going up 0.4% for the S&P. Interesting, interesting. Let's see how stocks open in a while, in a few minutes. China's Didi to the list from New York Stock Exchange months after blockbuster IPO. Didi Global has announced plans to delist its shares from the New York Stock Exchange and prepare for a listing in Hong Kong just 5 months after the Chinese ride-hailing giant's US initial public offering. Just days after the IPO, cybersecurity watchdog launched a probe into Didi to protect national security and public interest. The regulator also suspended new users' registrations on the app in China. Ooh. Reports emerged in July that Didi was considering going private in a move to appease Chinese authorities. How can you be bullish about Chinese stocks right now with all this negative news? After careful study, the company will start the work of delisting from NYSE and initiate preparation for listing in Hong Kong with immediate effect. Didi said in a Chinese statement on its official Weibo account. Okay. The South China Morning Post reported. Yeah. In the English language statement, the company said its American depository shares, ADS, will be convertible into freely tradable shares on another stock exchange. Didi said it will organize a shareholders meeting to vote on the issue. Okay, shares of Didi fell 6% in the pre-market. Awful news. Okay, the list. Now give me my money back before you leave. Didi's dramatic delisting rings alarm bells for Alibaba and others. More news. There is also more pressure coming from Chinese regulators who are reportedly planning to ban companies going public on foreign exchanges through the controversial variable interest entity structure. This is a VIE structure used by the likes of Alibaba, JD.com, Neo, XPeng to list in the US. China's security regulator denied the reports. Either way, tensions between the world's two largest economies on this particular issue are clearly worsening. It's very hard for me to decide what to do with my Alibaba shares. Things don't seem to be going that good. FTC sues to block Nvidia's 40 billion ARM deal. That's interesting news as well regarding Nvidia. Let's read this as well. The Federal Trade Commission sued to block US semiconductor maker Nvidia from acquiring UK chip designer ARM for $40 billion, saying the deal would give one of the largest chip companies control over the technology and designs its competitors rely on to develop their own chips. Blocking the largest ever semiconductor chip merger would prevent the chip conglomerate from stifling the innovation pipeline for next generation technologies, the FTC said. Adding the new company would have the means and incentive to unfairly undermine Nvidia's rivals. UK-based ARM licenses intellectual property to other technology companies, including Apple, Amazon, and Qualcomm. US-based Nvidia, one of the world's largest makers of graphics processing units, announced plans to buy ARM from Tokyo SoftBank Group in September 2020. Nvidia representative told Barron's it would continue to work to demonstrate that this transaction will benefit the industry and promote competition, saying Nvidia is committed to preserving ARM's open licensing model. The proposed acquisition came under increased scrutiny in recent months. The UK Digital and Culture Secretary in November, this would be huge if Nvidia manages to get this done. The UK Digital and Culture Secretary in November ordered a Phase 2 inquiry on the deal, asking the government's competition regulator to investigate potential antitrust and national security concerns. What's next? Nvidia wants to close the deal by March 2022, if the deal isn't completed by September 2022. SoftBank gains to keep 1.25 billion breakup fee. The FTC's administrative trial is scheduled to begin on May 10. Okay, stocks seem to be going up slowly. Gold is up. Gold is flat actually. Silver is going down. It seems like VIX is down 15%, so volatility is going down. Everything looks like we will probably have a green day, but things might turn quick when the market opens, so no one knows. On the other hand, let me check. On the other hand, S&P is up 0.3%. Dow is up 0.25%. 0.25%. Google delays required return to office. It runs a hybrid model right now. They're waiting until the new year to assess when US offices can safely resume. Yeah, whatever. Nothing else interesting here. And we don't have that much news today. Kind of slow day. Let's see what else we can read. Let's reload this. US job growth disappoints in November, while Omicron COVID variant now detected in 5 states. Messari CEO reflect on the year in crypto and more. Reed holds Wisdom3 launch crypto index for investment advisors. Blockchain.com to introduce NFT marketplaces as interest booms. Bitcoin confined to familiar range as stocks rise ahead of payrolls data. I wonder what will happen to stocks later this day. The truth is, I want them to dip more. I want them to go red and go down more so I can buy more. But yeah. Bitcoin miner Terra Wolf raises 200 million in debt and equity. Anyway. Let's read some more news for Alibaba, etc. ADR delisting could spark an Alibaba exodus. Investors are steadfast in ignoring Alibaba's enormous risks. I'm done reading about Alibaba's enormous risks. China to close loophole used by tech firms to foreign IPOs. Tencent opens WeChat further to rivals. What is this about? This is a very big article for... Oh, it's not that big. Okay. Tencent will begin testing a function... Tencent will soon allow WeChat groups to display links to external shopping sites such as Alibaba's Tmall and Taobao, taking another step toward dismantling long-standing barriers erected across China's most popular social media service. Tencent will begin testing a function soon to allow group chat participants to share links to third-party e-commerce platforms. It said in a brief official Blogspot Monday. Directed by regulators, the company will eventually allow WeChat's users more options for sharing content, though it didn't elaborate, and it promised to let them tweak settings and other ways in which to manage external sharing in future. The move is another major concession from China's leading social media and entertainment giant, whose signature app WeChat anchors the daily transactions of more than 1 billion Chinese. Tencent, which along with Alibaba Group Holding Ltd and ByteDance controls vast sections of the country's internet arena, had previously allowed users who upgraded to the latest version of WeChat to share external links only in one-on-one conversations, as part of the latest changes unveiled Monday. Tencent has done away with a warning page that pops up every time users click on external links. Tencent has resisted dismantling WeChat's barriers for fear of diluting the experience and driving users to rivals such as ByteDance Douyin, but China's technology regulators have issued strong warnings to internet firms to stop blocking rivals' links. That's part of a broader campaign by Beijing to eliminate the so-called walled gardens on or mobile ecosystems that shore up internet firms' control of consumer data and online profits. The government has accused a handful of companies of artificially perpetuating their dominance of respective spheres. Tencent in social media, Alibaba in e-commerce, and more recently ByteDance in video. Beijing is now considering asking media companies from Tencent to ByteDance to let rivals access and display their content in search results, Bloomberg News has reported. A move that could end up the internet advertising arena. Okay. Alibaba and Tencent have said they will comply with regulators' edicts, complicating the situation. New laws that took effect this month have put the onus of protecting users' data on China's internet firms. Tencent has been ordered to stop rolling out new apps as industry regulators review their compliance with new privacy laws. Bloomberg has reported. That's all for this article from Tencent. Nothing too interesting. We read that article the last day. There's not that much to cover today. It's kind of a slow day. Let's go back to not this. Go back to this. Let's go back to First Mover Asia. Bitcoin altcoins rebound from Black Friday plummet. Yeah, that's old news by now. Let's go back to Barron's if we find any good articles and see if there's anything interesting out there. 0.5% up for the S&P, 0.5% up for the Nasdaq futures. 0.5% up pre-market for Google. Let's check Apple, how Apple is doing. Where is Apple? Apple is flat, completely flat, and Costco completely flat as well. This will be an interesting day on how things will turn out. Let me go and check news for my favorite stocks. What is this? Tech stocks, yeah, whatever. Best ideas, whatever. This is old news. Let's check this out. Usually here on the right side, it shows news for my favorite stocks. Google delays return to office amid Omicron uncertainty. Yeah, we read both of those stories. Berkshire Mangia says markets even crazier than during dot-com bubble. Yet he decides to invest more in Alibaba during these crazy markets. Did it to the list, of course. FTC choose to block Nvidia's deal. There is not that much news around here. Yeah, it's kind of a slow day. It's kind of a slow Friday. So we don't have much news. There is not that much fear. VIX is down 50%. The day seems very slow, and I don't see anything crazy happening today. We will either finish 2.2% up on the market, 1.8% up, or we will either finish like 1% down. It will be interesting to see what happens. Let's read this, and I'll close a live stream earlier today. Charlie Munger says markets are overvalued and even crazier than dot-com bubble. The markets are overvalued and now even crazier than during the dot-com bubble of the late 1990s that ended in a bust. Berkshire Hathaway's Charlie Munger told a conference on Friday, according to Australian media reports. Munger also reiterated his view that crypto assets are worthless, according to a report in the Australian Financial Review. I wish they never been invented, he said. He noted that it seems like he doesn't have fun staying poor. I'm just kidding. He noted that many companies are trading at around 35 times earnings. It's hard to get results that could be good results in investing, he said. The Berkshire vice chairman identified Costco as one of his favorite companies. I predict that it will eventually become a huge internet player. He said, adding that he preferred it over Amazon. Munger, 97 years old, said one of the secrets of his long-time association with Berkshire founder Warren Buffett was that both knew what they knew and what they didn't. I don't think we're that smart. I don't think we're that diligent. Interesting. It's amazing how overvalued Costco is. I have noticed that as well, and I recently took my profits at 540. Now Costco is at 525. But anyway, wondering what he thinks about NFTs. Funny comment. Anyway, let me go ahead and check the stocks, the market. Actually, most of them are trying to go green, but struggling pre-market. But everything will happen once we open. Apple is up 0.3%. Okay. Let's check. Let's check the news on Yahoo Finance, which almost everyone sees. Disney Plus boosted by triple whammy of promo, bills and holiday banking. Okay, Disney Plus boosted. That's probably a good deal, good news for Disney, even though I don't like Disney. Wall Street bounces back after Omicron reports. Starbucks workers confident ahead of key union vote count next week. US employers added 210,000 jobs, plus 550,000 expected. Unemployment rate fell to 4.2%, 4.5% expected. Okay, whatever. Anyway, let's move on. Let's check my favorite stocks for the day. Not for the day. Actually, the stocks that I have on my watch list, not my favorite ones. So let's open almost everything I'm mostly interested in right now. Google, Alibaba, Nvidia, AMD, Costco, Apple, Facebook, Tencent. If Alibaba is down, Tencent is probably down as well. Let's go with Apple, Honest, Etsy, Hood, SoFi, Tattooed Chef. Let's go even with Skills. Let's check Starbucks as well. Let's check MicroStrategy. Did I open MicroStrategy? MicroStrategy and PepsiCo. Let's see. Let's take them one by one and check the pre-market prices. Intel 49.5. Intel is flat. Let's move on. Alphabet 0.5% up pre-market. I wonder how Alphabet will play out today. Let's move on. Alibaba 0.5% down pre-market. It's insane. Alibaba is insane, man. Whew. Insane. Anyway, Nvidia 320. Nvidia is kind of struggling right with a P ratio of 99. Nvidia is turning to a Tesla. Nvidia pulled the Tesla almost. It was funny because when Nvidia went from did the share, how is it called, share? Basically when they divide their shares and they make the number appear smaller, and everyone was like, it will drop probably after this share thing, and it didn't drop. It went from 200 to 2025, and then all the way runs. It was insane, an insane run. Costco, Wholesale Corporation, Costco, flat. Apple 164. Apple is kind of flat. FB 312. Facebook has a tough time going back up to its past prices. The highest it went was 384, 52-week range. Let's move on. Tencent. Tencent is not red in a weird way for one reason or the other. MicroStrategy 680. MicroStrategy struggling since Bitcoin is struggling. Palantir 1938. Okay, whatever. Honest seems like very low for now when the market seems to be going up for the day. But who knows what will happen later. Etsy 250. Okay, Etsy is 250. I would love for Etsy to drop back to 200, even 180. I would love that. It seems like it wasn't that long ago when it bounced around those prices. I actually traded Etsy some here between 200 and 2013. Robinhood Markets 24. SoFi 16.5. Okay, whatever. Nothing pretty interesting happening today. Stocks seem flat. We'll probably see bigger moves at the open in 6 minutes. Skills is down. Even though its price seems like it's very low, its market cap is not that low. Its market cap is not that low when you think that other companies like Tattooed Chef, like Corsair's market cap is 2 billion. Tattooed Chef market cap is 1 billion something. Or what? Let me check Tattooed Chef market cap. It's very low, very low. 1.3 billion, yeah, look. And they have bigger earnings, I think, from, if I'm not mistaken, or not. No, probably not. Anyway, Starbucks 112. MicroStrategy, yeah, we opened that one. And Pepsi 161. Anyway, I won't stay for the open, guys. I'll close the live stream here. Hope you enjoyed today's kind of fast live stream. There wasn't anything pretty interesting, so that's why we're kind of slow. We're having a slow day. Anyway, hope you enjoyed this one. Wait, what am I doing? Hope you enjoyed today's live stream, and I'll see you on the next one. Peace.